One of the problems we've seen is the fact that people are no longer direct investors in their company. They either go through a index fund or a mutual fund of some kind, BlackRock being one of the largest of these, where when you make an investment, you buy into the S&P 500 and you don't really know that that investment is going into Disney or Coca-Cola or Facebook or any of the other members of the S&P 500. But yet, you're the shareholder, you're the owner, there's an intermediary there. What role do they play?
Well, they play an enormous role. BlackRock has in the neighborhood of $9 trillion in assets under management. Vanguard has roughly $7 trillion in assets under management, and all of that is passive. And then you add in State Street with another $5 trillion. And what you're talking about is well over $20 trillion in assets managed passively by companies that have taken an overt public stance declaring that they wish for sustainability and other social goals to be their primary investment directives. So what you have are these companies taking investors' money and leveraging it to advance their political ends.
Yeah, well, I like sustainability. I think that's a great concept, but it's all comes down to the definition. What do they mean when they're saying sustainability?
What they mean when they say sustainability is climate change. They want for companies to have a specific plan for how they're going to become carbon neutral, how they're going to deal with the decarbonization of the economy, and how they're going to help save the world from this scourge that they see coming just over the horizon.
You know, this has been building for a long time, but something broke to make this the dominant force on Wall Street. When did that happen, and what was it that all of a sudden made this change to where Wall Street is now a leftist, globalist cabal literally controlling the American economy? What happened and when?
I think that the change probably came somewhere around the turn of this century. A conglomeration of factors sort of hit the street about that time. The social investment movement began probably a couple decades earlier with the student response to apartheid in South Africa. The students protested, asked their schools to divest from South Africa, and that formed the foundation of modern socially responsible investing, which was actually a wonderful thing. For the first 20 years or so, it was a bipartisan endeavor whereby you could choose to invest in alignment with your values. As an individual investor or as an institutional investor, you took the risk of lower return on investment in order to have the personal peace of mind of knowing that your investments were in alignment with your values. Somewhere around the year 2000, though, the UN gets very aggressive with climate change, its climate change agenda, the democratization of the markets throughout the 1990s, in part because of the delayed effect of 401ks and in part because of the boom of the 1990s. There are more people involved. And so I think there's, as I said, there are a significant number of factors that all sort of merged at the beginning of this century that pushed what was a noble and understandable investment tool into something a little bit considerably less benign.